This video is for educational purposes only and strategies that I use in my personal portfolio. Nothing in this video guarantees profits or future performance. Micron's earnings drop is today. If you're not positioned correctly in this stock right now, you are risking missing out on the absolute biggest foundational wealth building move of the entire AI revolution. The entire global semiconductor sector is hanging on a razor's edge, and what the CEO drops on this conference call later today will single-handedly dictate whether tech crashes or rips to new all-time highs, most likely at the opening bell tomorrow. Look, everybody is staring at Nvidia, Microsoft, and Meta completely blind to the fact that none of these multi-trillion-dollar enterprise companies function without the exact memory hardware that Micron controls. If you skip even 1 minute of this video, you could potentially be leaving your portfolio completely exposed to a massive market blind spot during a time of extreme global volatility. We have Iranian tensions escalating in the Middle East, whisper numbers of potential interest rate hikes suddenly back on the table, and broader market in absolute disarray. Yet institutional dark pool money is quietly shifting behind the scenes into this exact asset. Today, I'm giving you the definitive data backed on stance exactly how to play this earnings print, the precise probability mechanics of a massive beat versus a miss, and why this stock currently is sitting at an undeniable structural capitulation point that recently lifted the price over the past few days and over the past week. So let's get right into it. Now, before we dive into the video today, remember, no more than 5 to 10% of your portfolio in any one stock. Protect your portfolio. The market is risky. There's no guarantees. Protect your capital so you don't lose money, and make sure the stocks that I talk about fit your own personal goals and needs before you invest into them. So why is Micron's earnings today the most important critical catalyst in the entire financial calendar right now, especially for the tech sector? First, let's establish exactly what Micron is and what they do. Micron is not just another chip company. They're one of the 3 entities on the face of the earth that control the global supply of DRAM and NAND high bandwidth memory. When you think of artificial intelligence, you think of the massive data centers and advanced graphic processing units. But here is the massive structural reality. An AI accelerator chip is completely useless without ultra-raw high-bandwidth memory, specifically HBM3E and HBM4. Micron creates the hyperspeed digital highways that allow the AI models to process data. Without them, the entire artificial intelligence infrastructure grinds to a screeching halt. This brings us to what I call the tech trifecta, and why the structural architecture of the market makes Micron an absolute juggernaut. Think about the flow of capital right now. Hyperscalers like Microsoft and Meta are aggressively accelerating their capital expenditure, their CapEx spending. They're pouring tens of billions of dollars into building out the next generation of cloud infrastructure. Where does that money go? Where does it flow to? A massive portion goes directly to a company like Oracle. Oracle is printing astronomical revenue right now by leasing out cloud infrastructure and high-performance computing clusters specifically designed for AI training and inferencing. But how does Oracle build those world-class data centers for Microsoft and Meta? They rely heavily on top-tier computing architectures that require immense densities of Micron's high-bandwidth memory. It's a perfect closed-loop ecosystem. Microsoft and Meta boost CapEx right now, and Oracle captures the cloud infrastructure revenue, and Oracle completely relies on Micron to supply the core memory architecture to make it run. Micron sits at the very base of this multi-billion-dollar tech pyramid. That is why today's earnings is a massive leading indicator for the health of the entire global technology sector right now. Now look, if you're watching this right now and you're struggling to navigate this wild market, you're not on your own. If you're losing money, getting caught on the wrong side of earnings, or just feeling overwhelmed in the disarray, I want you to stop doing this the wrong way. Take a breath, breathe. There's a way out of this. Inside my private Discord community, I teach my students my exact proprietary hedge fund, dark pool tracking strategies, my advanced market psychology frameworks, and my precise technical indicators. I lay out exactly how I utilize my D-Stochastics RSI, my custom D-Fib retracements, my AVP, as well as my proprietary squeeze RSI indicator to spot institutional entries before they hit the retail tape. This isn't guesswork. This exact technical framework is how my students and I are locking in consistent profits, as you see on the screen right now. I don't just talk about these strategies, I execute them daily in my own personal portfolio. It is the exact blueprint I used to grow my micro challenge account from $900 to over $9,000 in 14 months. And in that exact same time frame, I took my smaller $250,000 account to over $2.1 million. Look, I was raised Catholic. My parents were really hard on me to do the right thing and give back whenever I could. And I'm far from perfect. I made a lot of mistakes. And just 7 years ago, I was bankrupt. And I know what it feels like to be on the bottom. That's where I was. My back was against against the wall, but I cracked the code and achieved financial freedom in the stock market. And I made a sole promise to myself that I would set out to help others so they'd have the opportunity and the chance to do the exact same thing. That financial freedom allowed me to buy my brother his dream car when he went through a brutal divorce, lost his car, and lost a lot of money, as you guys can see right there. It also allowed me to completely renovate my mom's bathroom and give her her dream bathroom she could never afford beforehand after she broke her leg and was in the hospital for several months. I also bought my dad a brand new truck. He never owned a new vehicle a day in his life, and he's 76 years old, and I was able to buy him his dream truck. Giving back makes me happy. I like to help others, and I love coaching students just like you to achieve their goals and dreams and reach their potential. Do not pass up on your opportunity right now. This year and next year are set up to be beautifully and historic for educated traders. Click the link in the information box right now to lock in your position in my Discord and stop guessing and start trading like an institution. I look forward to seeing you in the Discord real soon. If you look at Micron's financial growth over the last 1 to 3 years, the turnaround is nothing short of legendary. Go back to 2023, early 2024. The memory market was locked in a brutal cyclical downturn, burning cash. But look at the last 6 months to a year. Micron's revenue is absolutely skyrocketed, scaling from roughly $6.8 billion in Q3 of last year to tracking a massive consensus expectation of nearly $35 billion for the print dropping later today. We are talking about a year-over-year and quarterly revenue growth that has nearly quadrupled, paired with a massive projected explosion in earnings per share to around $19.72 to $20.81. Gross margins are guided to come in at a jaw-dropping 81%, driven by pure, unadulterated pricing power. So what is the guidance looking like for today, and are they going to beat? Management has already made it crystal clear that their entire high bandwidth memory production for the remainder of this year and the vast majority of next year is already at 100% sold out under firm customer agreements. The pricing power is heavily skewed in Micron's favor because demand is completely outstripping supply. This is what I've been saying about Micron for quite some time. Why is a massive earnings beat today so critical for the broader market? Well, right now the tech sector is battling severe headwinds. We have heightened geopolitical risks with Iranian tensions threatening global supply chains. We have macro uncertainty with sticky inflation keeping potential interest rate hikes actively on the Federal Reserve's table. The market is in a state of absolute friction. Tech needs a savior today to prove that the AI structured thesis is alive, well, and generating real massive cash flow. A monster beat and an upward guidance from Micron today is the exact catalyst needed to lift the entire semiconductor and tech sector out of this macro disarray. In the last few weeks leading up to today's print, we have seen an unprecedented wave of massive analyst upgrades. Wall Street firms are scrambling to adjust their models because they completely underestimated the structural demand for AI memory. Look at the numbers. Melissa Weathers over at Deutsche Bank just aggressively raised her price target on Micron to $1,500 a share with a firm buy rating, citing an undeniable structural supply-demand tightness in DRAM that will extend well into the next year and late 2028. TD Cowen more than doubled their target to $1,500 and Needham pushed theirs to $1,500. Citigroup, Stifel, and Rosenblatt are all clustered in that premium $1,200 to $1,500 range, while Cantor Fitzgerald is holding a strong $1,500 outlook. When you look out past the near-term noise, the long-term consensus models are projecting immense value. Over the next 1 year, analysts see the stock comfortably consolidating and breaking into that $1,300 to $1,500 territory as earnings materialize. Looking at 3 to 5 years out as the next generation AI architectures and edge AI in smartphones and PCs take hold, revenue forecasts are modeled to clear $113 billion per year, with returns on equity projected to settle at an astronomical 55%. By 7 years out, Micron is positioned to be a permanent multi-trillion-dollar foundational utility of the global digital economy. The highest level analyst ratings right now are aggressively front-running this exact structural shift. So, ahead of earnings today, why is Micron a good buy right now? Well, we have seen a classic pre-earnings capitulation and consolidation where weaker retail hands have shaken out due to the broader market fear, driving the stock into a highly key institutional order block. Let's look at the actual probabilities. Statistically, based on structural supply agreements and mid-quarter guidance updates, there is a very high 75% to 80% probability that Micron absolutely crushes the top and bottom line consensus estimates today. Management has a proven track record under-promising and over-delivering during cyclical upscale. However, as a professional disciplined trader, you must always calculate the downside. Let's talk about the 20% to 25% chance of a miss or a soft guidance reaction and exactly what happens to the market if this happens. If Micron misses or even hints that capital expenditures from their customers might moderate somewhat in 2027, the negative negative fallout will be immediate and fairly severe in my opinion. Options data right now is pricing in an immediate implied move that could trigger an immediate 11% pullback down towards the 1,060 to 1,040 range if the print doesn't perfectly satisfy the market's sky-high expectations. Furthermore, a miss here would validate the bears who argue that historic volatile boom-bust memory cycle isn't actually broken but is simply peaking. If Micron drops the ball today, it will drag Nvidia, AMD, Broadcom, and the entire NASDAQ down with it, accelerating a broader market correction amidst the existing Iranian tensions and rate hike fears. You must know the downside risk before the numbers drop. And right now, there's a lot at stake today for Micron's earnings. And this is the exact asymmetric reason why you cannot afford to trade blindly. If you want to know exactly how to protect your capital and deploy hedge fund strategies using my proprietary DFib, Squeeze RSI, AVP, and other strategies, regardless of whether the market rips or dips today, make sure you click the link in the information box below so this way you can join my Discord community and lock in your education, and let's secure your financial future together so that I can help you understand the market. Look, even if today's print triggers a short-term knee-jerk reaction or algorithmic pullback, the long-term structural bull case for Micron remains completely flawless. The CEO and management team have built an unbreakable, highly efficient operational moat. The massive cash flow generation coming from the AI tech trifecta guarantees that Micron is going to remain a dominant cash cow for years to come. Don't let the short-term market disarray or temporary macro headlines scare you out of generational wealth-building assets like Micron. Position yourself with cold, calculated execution and manage your risk parameters tightly and let the data do the heavy lifting. So Micron has earnings later today. Be safe, position yourself safe, and remember, this could be the tailwind and the sympathetic move needed for the tech sector because right now, the sector and the market is heavily dependent on Micron and what happens. All eyes are on Micron right now. I look forward to seeing you guys in the next video. Be safe out there. I look forward to seeing you in the Discord real soon. Link to get started is below. One love. Take care of yourselves, fam.